Welcome to TradeTheMBI.com. This is John. This report is for the 8th, and well, we're looking at the retrace of the bounce, and it was interesting because I was pointing this out. We had the positive extreme right here that came in right at this peak move above the shakeout, and at the same time that produced an immediate spider, which we talked about presenting weakness, and then we've had a straight downturn, and the rise above the plus 13.5, which began, generally creates weakness at that particular point. In this particular case, it's usually a little bit more drawn out before you get any upside turn on this. And so it takes a few days, but now all we've done is backfilled completely that breakout move of the positive extreme, which we expected. So no surprise there. Now, there are still several other positive extremes that, can take us all the way back to the 2300 range. Am I suggesting that that's where we're at? No, because you still have the cyan under red finally moved shorts above zero, so you finally have enough short entry back into this that there's the potential for a little bit of a squeeze, which is interesting. We're also getting the reboot. A cautionary thing, we still haven't seen a significant decline in our red DOC. If it stays above this 7.5, it's going to make it very difficult to drive the market much lower. So, worth pointing that out. It's also important to look at these ABM values so that you can see them. And so here we have almost a near reset for the shakeout here, except for the problem you've got with it is still plus 15. Actually, it's at 16 even. That's still a bit extreme. Doesn't mean we can't stay up there and elevated for a while. It just puts a little more volatility into the equation. Euro, every time the central banks get in there, they get revisited right back into the same area. So it poses some complications for central banks because they have to keep applying it, and you can only at a certain point go so far, and then it becomes problematic for trying to maintain it. And that's the difficulty they've had over the last several months, particularly with all this unsettling behavior that's taking place in various elections and the uncertainty of it. Now, we have also called for a continuation of TLT dropping all the way down there. Treasury's going to be under a lot of pressure, particularly if there is a rate hike. It's amazing when you have these lower adjustments of a little over 1% GDP growth, and they're talking about raising rates. It's an interesting time. Oil, the open spigot can at any time inflect that. So we have the DOC on here, spread, which is where the cyan moves above, and then we got orange going above, which creates a little bit of weakness. That's what we're seeing. Oversold in this case. We need to see the red DOC get all the way underneath there, and then have the orange propel lower. This is just moving back to these positive extremes. And another one right there. So it's always nice to see that work out that way. Now, from a 5K standpoint, saw a breakdown, and then what we ended up with was a very weak buy that happened right over about here, and as it started, we just didn't get very much oomph, and then as soon as it was just starting to get flat before it could take a ride up, we ended up with steel moving lower, effectively a DOC spread going there where the cyan shot back up, and that created a nice little fade going into end of day. Shakeout just not able to really improve. The problem I had with it was when you start to see an incline in the shakeout as you're just getting for zero, you've already got the azure and blue lines rising. It means that you've pretty much come towards the end of a run. So you have to be very careful when you see the steel crossing below cyan and that. And usually that's a breakdown, and then we broke into a lower zone. And once you broke into the lower zone with the red DOC, had a little bit more. You need to see a little bit more of a rising shakeout on the oversold. Kind of where we're at now is pretty much baseline. You can see almost getting to an overbought status at this particular point. But we finally have orange below red, so this actually looks to be the potential for a clean setup that could actually have a little bit more oomph to it. And you're above the long algo, which is another problem that you can see didn't happen. We just weren't getting above the long algo. So that's where the current state of things is. I would look for a little bit more weakness given what that daily chart is showing, in the sense that you're probably just going to be choppy around. I'm not looking for us to break below the ABM green at all or anything like that. Just that it's going to trade a little bit back and forth. We're very oversold from a steel standpoint. No short-term buyers at all stepping up into this. So it's going to have to come from some short covering in that to elevate. At this particular point, I don't know that we have a majority of new funds or anything like that ready to pop into the market. I think there have been some nice gains. People took some of that profit off of this dramatic move from the State of the Union speech, a little bit of a walk back from the Obamacare stuff that they're talking about now. But we may actually start to see some things stabilize. So looking forward to seeing that. Markets just flat right now, nothing special at this particular point. So we're just working through some of the exhaustion of propelling up, but I don't think I'm seeing the gloom and doom yet that a lot of people are describing. I think that they're just a little overdrawn on some of the dramatic nature of the move, but you have a perception change, and those always have to be factored in from a perspective standpoint for the broader market, because at this particular point, looking at growth policies versus no growth policies, it's a no-brainer that the market is going to generally be biased to the upside in this particular case. As always, though, trade well. We'll talk to you later.